Hey guys, it's Max Convexity. I hope everyone's having a good day out there. Let's look at these Defiance funds and see what we got going on today. It's about 5 o'clock here in the Central Time Zone. Market's been closed a couple of hours. Okay, so let's start with the buffer report. At the end of the day, I like to start with the buffer report. It's a quick way at a glance to see how your fund did. I don't talk about all the Yield Max funds. There's too many of them. I'm trying to make these reports 5 minutes. I have funds on here that aren't Yield Max, like TLTW, that I hardly ever mention. It's a great fund. It was up 36 basis points today, but it's Paradas, so it was up 61, but that's fine. It's good fun, right? But if you own it, you can look at it on the buffer report. And I do mention it sometimes if it's a standout. Today, there was not much to see in index land. There was not a lot of there was some outperformance. I say not a lot of outperformance. I take that back. It was all outperformance because the indexes didn't go anywhere. That's what threw me off. I thought the spreadsheet was messed up. The red is supposed to be the parent asset. Well, the Nasdaq was totally flat today, so it's down one basis point. So where you don't see anything, that means the parent asset was the Nasdaq. It's kind of hard to see, but in any event, triple QI outperformed, JEP outperformed, SPY-T outperformed, and SPY-T outperformed JEPY, which is good. And that's what we would expect because of the structure of the strategy. SPY-I had an all right day, up 13 basis points. SPY-I actually did not outperform its parent assets. One of the few ones that did not outperform. Neither did ULTY, but that's different. ULTY doesn't really have a parent asset. So, yeah, that's a lot of GPIX outperformed, as did BALI. TLTW, like we've already talked about, was in line, but it performed in line with its parent asset. Same thing with YBIT. So now let's look over here at the single names. The single names. Okay, same thing. I may not mention all of them, but I've tried to make it where, if you want to check yours and see what it looked like visually, like if you're a PayPay guy, you could see right there, blue taller than red. That's what you want to see. Parent asset outperformed the benchmark. I'm sorry, the high yield fund outperformed that old parent. All right, but the most liquid and highly traded funds are on the left-hand side. Of course, we have TSLY, Coney, all those right there. Right, they all underperformed today, but not bad. NVIDIA especially had a ton of buffer. Anyway, that's good. Buffer's good on the downside, and it holds you back on the upside, but it's something you have anyway. It's something you get when you trade options. You get buffer when you sell options. All right, but anyway, PayPay's a standout on the good side. PayPay, I'd say PayPay, Goop, Netflix. The Netflix high yield funds for both Curve. The Curve ones are down here at the right. And some of the random ones that I just like to follow, but that don't, that I don't follow a lot of other stuff from their company are here in the middle. Okay, now let's look at the charts a little bit. Well, that chart for Coinbase doesn't look promising. Anyway, Coinbase is pulling back today. Let's check out Bitcoin first. We'll start off with Bitcoin. Just kind of grinding for a couple of days between 63 and 64 and a half or so. All right, here we have Coinbase, which we've already looked at. We're going to look at it again because we're going to look at the strike prices for the options. The yellow boxes above are the strike prices. Whenever the line ends, that means either the option expired or they rolled it to a different option. In any event, they have two options open above them, covered calls. They have looks like the 237.50 and the 255. So they have plenty of room before their upside's capped. They're selling covered calls. These profit boxes are just like the short put profit boxes. Top line is max profit. So, ideally, people that have Coney, this fund, want the market by the end of the day, Friday, to either be at 237 or 255. Okay, now Tesla now has a different profit box. The red profit box is an inverse profit box, or it's a Tesla has an inverse fund now called Crash, and hopefully it's going to be a lot of fun. I did a review on it, and my review, said I wasn't hopeful that it would be that good of a hedge. So I'm afraid, because of the way these funds work and some of the problems they have with dragging behind the parent asset and decay and all that kind of stuff, I was afraid that there'd be circumstances where the funds might lose both ways, where both funds might lose, where they wouldn't be a great hedge. But the more I've been thinking about it, I do think that they will have some purpose for hedging. I'm going to have some more content on it soon. But in any event, the Crash profit box, Crash is selling covered puts. So the max profit for the red profit boxes is the bottom line, where the max profit for the yellow profit boxes is the top line. But if you had both of these funds, people are starting to buy both of these funds in different ratios. If you had both of these funds, you'd probably be fine with just straight sideways performance, because what's going to happen if the market blows out one of the strikes, then that side is going to be capped until they roll it. And yes, the managers will try to adjust it and everything. It's not like, they can't adjust. But in any event, without knowing anything else, if you have both funds, you're looking for just stable prices. If you have both funds, it's kind of like selling option strangles, in which you just want, which you're just trying to profit off the volatility collapsing, or you're trying to profit off not really so much volatility collapsing, it's time going by. As time goes by, volatility collapses, though. Okay, here's NVIDIA. Now, they're a little stronger than the other ones. It look like they're right between their two strike prices. Here's Mr. This is what Misty trades. Misty trades Mr. options. Misty's been a tremendous fund. Oh, my gosh. We'll look at a chart of Misty after this, but all right, I thought they had another strike. I thought they had another strike way up here, like at 1,600 or something. I guess not. Or like at 2,000 or something. What? Was that crazy? I guess I was dreaming that. Tesla did have a strike that was way out of the money. Okay, so now back to TSLY and Crash. I'm working on trying to develop some metrics related to the hedging and stuff. So far, since inception, somebody that invested in TSLY's up 13 basis points since the inception of Crash, and somebody that invested in Crash is up 2.41 basis points. So yes, the person that invested in both of them would be doing well because they're both up. Of course, that's not going to stay that way for very much longer. In any event, I'm going to have some material on that soon. But something I did want to mention is I spent all day looking into the hedge ratios and how to construct a pairs trade. Now, most pairs trades, lots of times you're pairs trading like Apple against Microsoft. It's two things that are correlated. Maybe you're short Apple and you're long Microsoft, or vice versa. Well, this is kind of a different pairs trade because it's two things that are inversely correlated. Anyway, people trade, and I've done this before, the VIX and the SPY. But then when you trade those, you have VIX calls at the same time you have SPY calls. Or that's the way that trade works. You're double long. There's other ways to do it besides getting calls in both. You could also sell puts in both. You could also sell puts in one of them and buy calls in the other one of them, or vice versa. But that's the trade you're going for in that circumstance. Right now, the proper ratio, there's a jillion ways to figure the ratio, or I don't know, a jillion ways. There's multiple ways. The most basic, easy way has the ratio at 74. So you have 74 shares of Crash for every 100 shares of TSLY you have right now. And actually, the ratio, just because it's the ratio doesn't mean it always works. The ratio would have hurt you a little bit, you know, just over the past 4 days. It's just a 4-day performance. But on a 4-day performance, you would have wanted to have more crash than TSLY, because crash had actually outperformed TSLY. But anyway, like I say, all these numbers will be changing all the time. But the basic math: 74 shares of crash for every 100 shares of TSLY at this point. I'll be making a video that will update that soon. All right, guys, I appreciate you guys for being here with me today. I hope you like the new, quicker updates. The end of the day one is more like 10 minutes instead of 5, but still, the ones during the day when you guys are at work, I know your time's valuable. The market's open, you're trading, doing stuff. I get it. Those will remain at 5 minutes, and we're going to keep using the consolidated short form spreadsheet, so you know you can take one look at it and know where you stand. All right, guys, you have a great day.